This is Robert Kraft, and I'm your host on SNN.Network. And with me today for this Wall Street View is Karl Douglas, who's the Managing Director at PPMT Capital. Karl, welcome to the program.
Thanks, Robert. It's always a pleasure.
It's a pleasure to have you on. So, for those who may have missed our original podcast interview that we did a while back, what is your background? How did you get into the wide world of finance and also a little bit of a background on PPMT Capital?
Okay, I'll cover both. I started on Wall Street in 1980s, spent a long time with the bulge bracket firms, and advanced forward quickly to 2000. Started a technology company, and from that point on, after exiting that opportunity, became a merchant banker working in multiple sectors. I'm now the managing partner for PPMT Capital, and PPMT Capital is effectively a multifamily office. Much of the activities we have are client-driven. We operate in 5 sectors predominantly. Real estate, of course, which is a family office mainstay. We also are in mining and energy, food and agriculture, water and environmental services, infrastructure, and that's basically our cover. We are seeing a tremendous amount of increased inquiry, though, in another vertical. And I'm not sure I would even call it a vertical. It's artificial intelligence.
All right, and that is actually the main theme that we're going to be talking about here today, because the recent article that you published, or that we published in the MicroCap review that you put forth, is an article titled "Family Offices Are Investing Heavily in Artificial Intelligence." And then in that article you give 5 reasons why they're looking at this space. So, to start off, what are those 5 reasons?
Well, I mean, there are a number of reasons, basically, but essentially the 2 predominant reasons are, number one, artificial intelligence is going to have a phenomenal growth on productivity over the next 10 to 15 years and beyond, actually. And that's going to drop directly into earnings of major corporations or anyone that's involved in the industries that will be affected.
Mm-hmm.
There's various models on how much productivity increase will take place, but one of the most significant numbers is that $14 trillion, which is more than the Chinese economy now, will basically be created through artificial intelligence over the next 10 to 30 years.
Got it. All right, so we're going to dive deeper into these 5 reasons as to why they're looking to invest heavily into artificial intelligence. And the first thing that you really talk about is how there's the biggest economic catalyst in 150 years. So why is now the biggest economic catalyst in 150 years for artificial intelligence?
Well, it all comes down to increased productivity.
Mm-hmm.
And there have been several milestones that were achieved within the last 5 years that have allowed artificial intelligence to now have a greater presence in industry, which will create more and more productivity. One of the most significant milestones is that it took place in 2015, where in fact the New York company actually was successful in creating the most advanced image recognition for computers.
Mm-hmm.
The benchmark for image recognition for computers was in 2010, for example, 78% accuracy. And there was a major company that sort of dominated the market for things like facial recognition. But a significant change took place in 2015, which is that we went past the benchmark in terms of image recognition. The benchmark was always the human eye, which is 95% accurate. And in 2015, 97% accuracy was achieved by computer technology.
Got it. And then, from there, how come there are greater advances than in machine learning and deep learning now? Those are 2 big concepts when it comes to artificial intelligence. So, how come that's happening more and more at a faster rate at this point in our history?
Well, what's happening is really 2 things. Number one, that the machines themselves are advancing. Machine learning was basically sort of human input, human algorithms that were basically programmed that allow computers to process faster. for the last 15 years, computers have started to program themselves and to actually look almost in a neural network type fashion. And one of the biggest enablers of all of this is the amount of computation that they can do. We've talked previously about a concept called the singularity, which is really just the sum total of computing power exceeding what we're capable of doing ourselves. And the conversion of increased processing power and the simple time that it's taken for machines to evolve into deep learning, where essentially they're creating their own algorithms now, and self-learning, if you will. The conversion of those two things is why we're seeing tremendous increase in artificial intelligence breakthroughs.
Got it. And then, I guess this is pretty related to that last point, is this idea that the adoption cycle is getting shorter. So can you get into that? Why is it then getting shorter? Even because you would still think that, okay, even though these advances are happening faster and faster, you still have to create a business around this, But before we get into that next point, how are these new advances getting adopted at a much faster pace?
Well, it depends on the industry that you're looking at, but let's take, for example, automated cars, right? So, the rollout has started to increase tremendously because of new capabilities. Prior to 2015, we were quite limited in terms of, how advanced, autonomous vehicles could be. But once we passed that 95% threshold, image recognition basically became as effective as a human. The whole rollout of autonomous vehicles was accelerated significantly, and now it's a function of just iterations. So we're already at what they call level 3 automation. The ultimate is level 5, where the car will basically completely drive itself, whether you're in it or not. The car you'll open up an app on your phone and say, I'm going to be at XYZ location, come and get me, and your car will come and get you. Or a car that you may or may not own will come and get you, like an Uber vehicle, for example. So, basically, that's an example of how things are rolling out quickly. Productivity is driving a lot in industry, and AI is basically representing a huge opportunity for lots of different industries to basically start to improve their bottom line by, essentially automating a lot of processes and improving productivity in those processes.
That leads into my next question, which is, what types of new business types have been created as a result of AI?
There's tremendous amount of marketing, for example. So the way that users are receiving communication in terms of marketing is tremendously AI-driven these days. There's a lot of predictive marketing based on data that's available, from prior user experience that's reported. So marketing is growing tremendously. Accommodations, hospitality is becoming incredibly more efficient. If you look at how you book an airline reservation today, you call a major airline, and the airline already has your profile as soon as you've dialed, because your number basically triggers your profile. Mm-hmm. The voice automation in the airline industry has become almost flawless, and that's carrying over to a number of different areas in hospitality as well, in the hotel booking area.
Right. And then, the last point that you made too, is as one of the reasons why family offices are looking at artificial intelligence, is this idea of you can calculate predictable growth for artificial intelligence. So, how do you do that?
Well, it's a good question, and there's no trick to it. Essentially, if you look at the value chain, I'll give you an example. The latest generation of cell phones or smartphones, whether pick your brand, they've gone essentially from 2 cameras on a phone to 8, right? Now, in my book, that's a 400% increase in top line, right? Because buying four times as many cameras from those manufacturers. Mm-hmm. So you look at the range of manufacturers that are in, let's say, the smartphone supply chain, and it's fairly easy to see what's going to happen with that. So there's no science to it that you don't have to understand the technology. What you have to understand is how the demand is being increased. Mm-hmm. AI is basically dependent on several things. It's dependent on ability to store the information in massive quantities, and there are models about the amount of data growth that is going to take place, and it's logarithmic growth as a result of AI. They have to be able to move the data, right? And then you have to be able to process the data. So let's look at that cycle for a moment. Where are the opportunities? Well, in storing the data, clearly data center and data center technology basically are going to be in tremendous demand. In fact, we've already seen significant growth, but through 2030, this is the fourfold increase in demand.
Right.
All of the 5G rollout that's taking place, 5G service providers, 5G technology providers, are all tremendous growth opportunities. And then you've got the data processing. So, most of the complex data processing, because a lot of it, AI-driven data processing, is image processing, you're looking at GPUs, right? So look at the major GPU providers within that value chain, and you've got, ability to find some very interesting opportunities for investment. The reality is that it's across so many sectors that there are a lot of firms that are modeling out now tremendous increase in just economic growth, as much as 100% increase in economic growth. So you look at the U.S. economy, for example, 2.6% last year. They're modeling out that within the next 10 years that could double as a result of AI. So imagine growing at 5.2%, right, and what that does for the economy. Mm-hmm. So what's really significant about AI as well is that is the contribution to earnings growth. So a lot of family offices, for example, are managing equity portfolios. So you go through your portfolio, which companies are really planning to participate 100% benefit from AI, and which are not. Switch it over to M&A and acquisitions. You're going to acquire a machining company or a CNC company. Which companies are fully plugged in and have already absorbed the capex associated with AI and are current in terms of management, and which are not? You're going to see differences in valuations. Mm-hmm. So within your portfolio, whether it's public portfolio or private portfolio, it makes a lot of sense to look at how they're invested in AI. Because to your point, the adoption cycle is shortening, and if you're on top of that, it's going to be reflected in valuation. And if not, then obviously those companies are going to pay a price.
Right. So my last question, and it's really to add some context to our conversation here, because while we were inspired to talk about artificial intelligence because family offices are, as your title states, are looking to invest heavily in the sector. Are family offices, do they traditionally look at areas of interest or new areas or new potential business opportunities sooner than, let's say, individual investors or maybe some other institutions out there?
It's really interesting. The investment focus of family offices changed so tremendously over just the last 5 years. Mm-hmm. That I've seen family offices go from almost entirely real estate to a private equity focus to now an actual venture capital focus. Mm. But the portfolios are basically changing significantly in terms of how they're allocating their assets. Mm-hmm. But the main driver behind AI is very simple. The impact on the economy is going to be so big, it's just too big to ignore. And so, you have to, and it also, as I pointed out, affects portfolio positions and valuations. So if you own companies that aren't necessarily keeping up with the AI requirements of that specific industry, then, there's going to be potential issues in terms of valuation,
Mm-hmm.
potential opportunities in terms of valuation as well, to look at the flip side of that.
Mm-hmm.
But this is so important and so broad that it's not a sector, it's not a technology play. It's a matter of making sure that portfolios are basically taking advantage of AI for economic and earnings growth.
Got it. So, sorry, I lied. That wasn't my last question. I have one more question. So, in terms of right now, where we're at currently in terms of artificial intelligence adoption and companies looking to bring it on board to optimize certain parts of their processes, what would you say then are certain characteristics that companies are utilizing from AI to either enter the space or, in essence, trying to be the leaders of the pack?
Well, certainly in terms of SaaS automation and SaaS platforms, customer relationship management, CRM, for example, is a good one because, obviously the AI impact on sales is just tremendous. And what's available in the CRM market now through AI is has a direct impact on top line growth for most companies. The customer experience is being, for example, completely streamlined, made easy. There are technologies out there now where you can watch a video, click on the video, and the manufacturer for a particular clothing line or sneaker or what have you immediately pops up and is available without having to go to a YouTube or something like that and basically click a URL and go through all these complexities. You can actually go straight into the purchase process.
Mm-hmm.
Now, that's the technology that I'm in. It was actually already here. So, that's what's being rolled.
Okay, I'm sorry. I lied again. I got one more question.
Okay.
and on the reverse side of things, because I've seen press releases out there, I've seen company presentations where they're saying, ooh, we have this cool now, we're doing artificial intelligence tech, and you're kind of like, are you? Are you really? What does that mean then? So, on the flip side, then, what are some things to look out for from companies that may saying they now have an artificial intelligence component to their business?
Well, that's a really good question. I think you want to see that AI is incorporated into the fundamental components of the business itself. So, for example, it's one thing to have AI involved in a marketing campaign, but if your logistics side of the business is not AI enabled, then clearly there would be a bottleneck there.
Right.
You have to fulfill those orders. Similarly, in terms of controls and in terms of enterprise resource planning, we like to see the AI go through all of those different segments of the business so that it's total integration. To your point, it's not good to put a just band-aid on a business and say, well, we've got one little AI component, but the rest of it's just sort of old world.
Right. Well, okay. That was my last question.
Really?
Well, I got one more, but this was a stock one, I swear. Where can my audience go and find more information about you and PPMT Capital?
Oh, that's PPMTCapital.com.
Perfect. Karl, thank you for joining me today, and you have a great weekend, my friend.
It's a pleasure.